All right. Hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks. Trying to get my mic adjusted here, and we'll jump in. Wanted to jump on for our midweek options update. We've had a very active start to the week, no doubt about it. We have a lot of interesting price action going on in very key markets. So I want to talk about that here today, how that impacts us for the rest of this week. And then also talk through some of our overnight pop trades that we've closed out here recently, specifically the ones here this morning. So let me try to get my mic fixed here. I don't know what's going on here. My mic is bouncing all over the place on me, so I'm just trying to get it tightened up. All right, so make sure that's coming through okay. All right, let's talk about markets here today. Let's talk about SPY here to start. This is the daily chart. This is the chart that I'd like to look at to gauge overall market environment. All right, we've had a very interesting stretch, and we've talked about the range that we've been stuck in. We've been stuck between 380 and 390 on SPY. We've had a couple of cases where we have tried to break out of that range. Let me make sure my charts are up. Doesn't look like they are. See if that works. There we go. All right, sorry about that, guys. So we're in the process of moving. We just moved from Michigan down to Indianapolis here a few months ago, and I'm actually in an office that is only temporary. So I've got a setup here that works, but I've got my microphone in different spots on a daily basis. I've got boxes all over the place in the office, and as you can see behind me, a blank wall. I know it looks pretty boring to not have anything hung up because I'm not going to be here for more than a few more weeks. I was just waiting to get moved into our new spot. So trying to get my microphone. I don't know why it's bouncing all over the place. Just been moving it around all day. So hopefully you can see my screen at this point. And what I was talking about on this daily chart of SPY, we've been pinned between 380 and 390. It's been in this range for the last couple weeks. We've had big intraday range. We've had a lot of movement inside of this range. We just haven't been able to break outside either the 390 upper channel or the 380 channel down below. Here today, we have tested 390 again on the upside. The high of the session on SPY, 391.40. So we did get above that 390 level intraday. We were not able to close up above that level. So that's going to be the key area that we'll want to watch over the next couple of days. And what's very interesting is if you compare what's been happening on SPY and the Dow to what we've been seeing on QQQ, very different story. We continue to see weakness in tech. We had the Dow up 500 points here today, the S&P up almost 30 on the futures, the Russell up 40, and then you had the NASDAQ actually lower. We've talked about this in the past. It's very difficult to get this market to move with follow through if we're not getting all areas participating. If there's one area that's lagging behind, it's difficult to get that follow through. That's why SPY's had a difficult time breaking up through that upper band. With the weakness in tech, it's tricky. Now, if we start to see the NASDAQ strengthen over the next couple of days, we now have some oversold names in the near term. We could very well see that be the catalyst to springboard us back up to the all-time high at 394.17. That's the all-time high from a couple weeks ago. Above that level, I know there's still a lot of talk about people waiting for SPY to hit 400. That would correspond to SPX hitting 4,000. We'll see if that happens. I know there's a lot of stimulus being thrown at this market still. We'll see. The volume continues to be very, very good. That's a good sign. Over 100 million shares traded again today. Very good range. I want to see that number between 80 and 100 million is what I'm typically looking for. And we hit that again today. The ATR, the average true range above 6. It's been that way all week. That's a great number, indicating very good intraday price action. The missing piece has been the follow through. And in order for that to happen, we really want to see the NASDAQ kick it in here. If we're going to break out back up to those all-time highs, we need to see the NASDAQ strengthen over the next few days. That means Apple, Amazon, Facebook, Google. We want to see those key NASDAQ stocks bounce over the next few days. That's very possible. I mean, we've seen it over the last 12 months. Anytime that we've had any weakness in the NASDAQ, it's lasted maybe a couple days, a week if we're lucky, and then we bounce right back higher. So we'll see if that plays out going into the end of the week. So we're cautiously bullish here in the near term, looking for price to get up above 390, see if we can get back up and test 394.17. Let's take a look at our overnight pop trades here. We've been really cautious with the overnight pop trades. Go ahead and shrink this down. They've been doing great for us. Absolutely. But we have been a little bit cautious with position sizing here of late, knowing that this market could go either way. We've had big moves in both directions. The overnight trades are great, but on a trade that moves against us, we just don't have the ability to hold on very long, right? Because we're looking to close out of those trades in 24 hours or less. We just aren't able to make adjustments to losing trades. So it's not a negative. It's something that we've got to be cautious of when you start to see these big moves. Look at the last 24 hours. We've had futures all over the place. We've had markets intraday all over the place. It does become a little bit more challenging when you have such big moves. So what we did last night, and I say last night, I'm talking about last evening, going into the close, we sold a put spread. And we sold the March 10, 388, 386 put spread on SPY. These are the options that were expiring today. We'd like to place these trades going into expiration. And what we did here this morning, first thing this morning, we were able to close out of this trade, and I closed it out for 27 cents. I wanted to cover this one because it's another unique situation to where, markets were doing what we needed them to do this morning. We did have a higher open. So why did I close out of the trade within the first few minutes of the session? Why not hold on to the trade? I booked a $33 profit per spread. It gave me a 24% return on my capital overnight. It gave me about 50% of the max profit on the trade. Well, if I booked 50% of the max profit, why not hold to go for the additional 50%? In this market, when you have such big moves intraday, we get reversals out of nowhere, and they're pretty big reversals. We saw it on the NASDAQ today. We saw big moves in both directions. What I didn't want to have happen is have a nice profit first thing this morning, hold throughout the rest of the day, and then have a midday reversal, take back all that profit, and have me take a potential losing trade. So booking the profit is still the best way to go. If we've got a profit first thing in the morning, within the first few minutes of the session, I typically like to jump on that profit, book the profit, and free up the capital for the next trade. It also just frees up my schedule. That way I don't have to sit there and stress out throughout the rest of the day waiting to see if the trade is going to hang in there or not. So obviously you can see down at the bottom, this spread expired worthless here at the end of the day. Had we held, it would have worked. We would have been able to book the additional profit. But it was a profit nonetheless. Really nice trade for us. Let me pull up the spreadsheet so you can see our results here. Okay, we've had 14 winners in a row here on the overnight pop trade. So you can see the range of profits anywhere from a 6% return overnight all the way up to around 35%. It's very typical for us on a winning trade with these overnight pops to be in that 20 to 40% return on our capital range overnight. We consider that just a huge victory. Now, notice we're going to have some losing trades along the way. We're definitely going to have trades that go against us. But when you take a look at using a credit spread overnight, because we've got 5 ways of making money on the trade, on this SPY trade from last night, from yesterday afternoon, we made money if the stock moved up, down, or sideways. It didn't matter to us as long as price stayed above 388. We also made money from the time decay adding up. The time decay was extreme because these options expired today. We also made money from the volatility decreasing. The VIX was down $1.50 today. All of that came into play, and it allowed us to have a very high probability of success on the position. When we take a look at these credit spreads, knowing that we have 5 ways of making money on the position, we can trust that the winning percentage is going to be quite high over time. Over the past 74 trades that we have taken, we've had around a 77% win rate. When you're winning between 7 and 8 trades out of 10, that's a formula for success. Even though we're going to have losing trades along the way, when you have that type of a winning percentage, it's going to allow us to battle back from the losers very quickly and generate that consistent source of income. As I've talked about in the previous sessions, I'm not saying that we should focus exclusively on the overnight pop trade. I have some customers that do that, and they've done quite well. But for me, it's one piece to the puzzle for me. It's one tool that I have in my toolbox. It generates that consistent source of income week in and week out. And then I also have some of those longer term positions that I'm looking to hold for anywhere from 3 to 30 days. That diversification is what generates that really nice growth in my equity curve. All right. So I'm not saying you should abandon your day trading on the futures side. I'm not saying you should abandon some of your longer term trading, but this can be a great complement to those approaches. So just a really nice stretch. Are we going to maintain this type of a pace where you're booking 13, 14 winners in a row? No, we're going to have some losses along the way, but because we're able to control the risk, this trade that we put on last night, had we lost on the trade, we knew what the maximum loss was right up front. It allows us to keep that risk at a manageable level. The risk last night was $140 per spread. If I was dead wrong and the market completely fell apart here today, I was only going to lose $140. That was my max loss. I could have closed it out for a partial loss had the trade moved against me first thing this morning. So we're easily able to control the risk on these types of trades. So we'll continue to look for these overnight pop situations. Our next opportunity would be tomorrow afternoon going into Friday. SPY, the S&P 500 ETF, has Monday, Wednesday, and Friday expiration. So we have 3 opportunities for these types of trades every week. And then Thursday afternoon into Friday, any other stock or ETF that has a weekly option, we can look for those overnight trades. So tomorrow afternoon, potentially Apple, Facebook, Tesla, Netflix, SPY, QQQ. We have a lot of opportunity there. Thursday afternoon into Friday, I typically look for 1 to 2 overnight pop trades to trigger in for us. So we'll jump on those here tomorrow afternoon. Like to place those trades right around 3:30 Eastern time. So we'll pick it back up tomorrow afternoon, see if we can get another trade or 2 on going into the end of the week. Let's jump over to another brand new trade that we put on this afternoon. This one is not an overnight trade. This is meant to be a longer term holding. When I say longer term, typically 3 to 30 days is what we're looking for out of these types of trades. What you're looking at here is a chart of DIA. This is the Dow Jones Industrial Average ETF, and this is on a 195-minute time frame. Notice here on the right-hand side, looking at the past week, price action has been very, very impressive. Right? We have seen a move from down just over 305 to up on the highs today, right around 325. It's a $20 rally here over the past week. It's a big move for the Dow, and the Dow is only 30 stocks. This is an impressive move. It's not the tech sector. It's not Apple. It's not Amazon. I mean, these are big moves on DIA. As a result, we are overbought. How do I quantify that? If we take a look at the pulse indicator down at the bottom, 3 out of the past 4 bars have plotted yellow, indicating that price is between a 1 and a 2 standard deviation channel move on the upside. This will typically lead to either a period of consolidation or a reversal in the other direction, because when we hit an extreme like this, you're typically looking at a market that's already made a heck of a move. We know that this type of a move, a $20 move over the past 4 or 5 days in DIA, that's not sustainable. It's not a move that we typically see historically. If we take a look at previous moves, when we had extremes on the pulse, notice back here, back end of January, we had yellow and green bars on the pulse indicator. We saw a nice bounce higher. If we go back to end of last year, we saw a yellow pulse bar here, end of December, saw a nice pop to the upside. It's a very repeatable pattern when we hit these types of extremes. So when I saw this pattern today, we know the Dow has been super strong. It's been the strong one out of the bunch. And we also talked about how the NASDAQ was lagging behind. We could certainly see a situation here over the next week or two where the Dow starts to lag and it passes the baton onto the NASDAQ. And we see the NASDAQ take the leadership role to the upside. If that happens, I want a neutral to bearish position on. I'm not looking to get aggressive on the downside. I'm not trying to pick a top here. I'm not expecting the market to collapse. But if I sell an out of the money call spread, it allows me to benefit from a period of consolidation or even a reversal to the downside. As a result, what we did this afternoon, go over to the trade page here, is we came in, and as soon as I can get the order up, we went out to the April monthly options. Those are the ones with 37 days left to expiration. We went out and we sold the 330, 335 call spread. To do that inside of Thinkorswim, I loaded up the April options. I went out to the 330 calls, the out of the money calls. I right-clicked on those. I went down to sell, and I selected vertical. That pops up a $5 wide spread down at the bottom. Right now, as of the close this afternoon, it was trading for right around $1.72. That's very, very similar to the price we got filled at. I'm trying to check my fill price, $1.75. So it's right there, right inside of the range that we got filled at this afternoon. So let me change that price to $1.75 so you can see the profile of the trade that we got filled on. It was risking $325 per spread. That's the most I can lose on the position if I am dead wrong. That would happen if DIA continued to move to the upside. I'm not expecting that because the market's already overbought. I make money if the stock moves up, down, or sideways, as long as price stays below $331.75. It gives us almost an $8 cushion. The current price of DIA is at $323.30. I'm not in trouble unless DIA goes all the way above $331.75. Any type of a move to the downside is going to allow me to make money the fastest on this trade. If we get time decay to add up, which it will every day, that's also going to help us, and we'll be helped by the volatility decreasing if it does happen. So those are the 5 routes that I have of making money on the position. The $175 that I collected per spread, that's my max profit. So let's just say DIA does fall out of bed. The market makes another big wave to the downside. The most I'm going to make on this spread is $175. So I do give up the home run profit potential, but in exchange, I get a much lower risk on the trade. I also give myself 5 ways of making money on the trade. So I love the position here. Doesn't take a huge account size, doesn't take a ton of time to take this trade. We're talking about 10 minutes a day or less. It's not going to be a trade that we have to monitor opening to closing bell. These are trades that we can check in periodically throughout the day. I'll check in on it a couple times a day and just let it do its thing. The way that I'm managing the trade, the $1.75 that I collected to put the trade on, that is the most I can make on the position. Now, the only time I'm going to book the entire profit is if I hold all the way to expiration. I'm not looking to do that. I am targeting between 50 and 75% of the max profit. So if I can buy this thing back for between 43 and 86 cents or so, anywhere inside of that range, that would allow me to keep between 50 and 75%. Okay, so that's how we're going to manage the trade here over the next couple of weeks. Again, we make money the fastest on this trade. The ideal scenario is for DIA to move lower. We just don't need a big move lower. We just need price to stay below $331.75. All right, so that was one of the trades that we put on this afternoon. Let me show you one more. This one was just strictly with a long call position. And what we are looking at here on UNG, this is the natural gas ETF. We did get a move on our trend strength histogram down at the bottom. That's the red and blue histogram. We did get a move below -5. It happened right here. And that indicates an oversold condition. We also saw price action here today try to get up through the 8 EMA. We are looking for, in the near term, a bounce higher on natural gas. So what we did is we came in and we bought the 9 calls out in April. These guys are right here. And we paid $1.19 for these call options. We paid $119 per contract. This is a more aggressive trade than DIA. This gives me one way of making money. I have to have UNG move to the upside, and it's got to do so quickly. If it takes too long or if the move's not big enough, that's going to cause me to lose value on the position, potentially take a loss on the trade. So an aggressive trade, I don't mind the aggressiveness in certain cases. What I don't want to do is just limit myself to buying calls and puts only. That's when you're going to get into trouble long-term. If the market's active, you can get away with it. But when the market starts to get choppy, when we start to see more indecision, that's when you really want to have those credit spreads at your disposal. So those are 2 new trades that we put on here this afternoon. UNG, I should point out, my target initially is 100% return. I'm looking to double my money on the trade. So if I can close it out for $2.38, that would be acceptable. On the loss side, if we do take a 50% loss, if the option's down 50%, which in our case, if we see it trading for 59 cents, we'll go ahead and take it off. Okay, so we'll see what happens here on UNG over the next few days. All right, so the outlook for the next couple of days, again, we just have to respect that 390 level. If that level is broken here tomorrow, especially on a closing basis, if we get another rally, it's going to be another quick move up to the all-time high at 394.17. The stimulus plan was passed here this afternoon. We all expected it to, right? It already made it through the Senate and made it through the House. So another almost $2 trillion being thrown at the system. A lot of that has already been priced in our opinion. I'm not saying the market can't head higher from here, but I think we're seeing this week with the back and forth movement. I think we're going to see more of that here in the weeks to come. I think it's going to be a very active market in both directions. And we'll do our best to take what the market's giving us here through some different strategies like we talked about today. So if you have any questions on markets I covered here today, or any markets that you're curious about, maybe you're trading a different stock, different ETF that you want me to take a look at, let me know. Otherwise, I will be back on Friday for our weekly recap. I'll jump back on Friday, take a look at how we wrapped up the week. We'll take a look at the overnight pop trades that we open tomorrow afternoon, see how those wrap up the week as well. If you have any questions in the meantime, if you are watching the recording on Facebook or YouTube, feel free to post a comment there or email me directly. Mike@netpicks.com is the email address. I'd love to connect and help with any questions you might have. All right, so I'm going to wrap it up for today. Enjoy your afternoon. Enjoy your evening, everybody. It's a nice 70 degrees here in Indianapolis, so I'm going to try to get outside with my son here, try to go for a bike ride and enjoy the nice weather. So enjoy your evening, everybody, and we'll talk to you here on Friday.